Hey everybody, Brian Shannon here. It is Saturday, the 21st of March, 2015. I was out for the last couple days, so let's take a look at the action together here. The S&P 500 and the rest of the equity markets had a great week. Oil was down a little bit further, and the dollar is starting to maybe show some weakness here in the near term. So let's take a look at the numbers, and rather look at the charts and see where we can make sense of this market. The year-to-date volume-weighted average price has in fact acted as support here. That's that purple line. That's why we keep an eye on that. It often is an important level throughout the year, as well as, of course, it was the 50% retracement and where we had seen the 100-day moving average come. And whenever we have more technical reasons to believe the market is making a turning point, it kind of strengthens that level. So the S&P 500 we saw the pull back down and retest of the 50% retracement. The market gapped up early in the week, made the higher high. We were looking for a pullback down towards 206.5 to 207, and that's exactly where we found some support in here this week. And after the Fed move, obviously that's where we had that little shakeout down to the 206.5 level, and the Fed market exploded higher, telling us once again, this is why we listen to price action and not what the people say that the markets are supposed to do. The market was supposed to go down when they removed the word patient, but obviously the market exploded, and that's why we need to be aware of what's the direction of the 5-day moving average, where have we come from, where do we have the potential to go, and the market is making those higher highs and higher lows on the intermediate term time frame, and now looks poised to challenge these highs for the year, as well as I think that you could look at this in terms of a measured move and say conservatively we could call this 199 up to 212 as the recent highs. So that would be A to B, and point C would be about 205. So we would add 13 points to 205, and we would come up with a price objective near about 218 for a measured move. And again, as with any price objective, it doesn't mean that we just buy and wait for it to get there before we sell. The market will have gyrations on the way up towards that level, if in fact it does reach that level. So our job is always to manage risk. For next week, we're going to want to see that the very important level for this market to hold is about 208.75 to 209.25. That's our bigger band of support that we want to see hold. If we can remain above that level, we remain innocent till proven guilty, as we are above a rising 5-day moving average, and we would expect to see continued higher prices from this level. The Nasdaq was up for the week, obviously, as well. This market did kind of the same thing. That is, it rallied and pulled back to the rising 5-day moving average, and after that, it made the higher high. So this is it had been the most recent relevant higher low, 106. But I think for next week, really probably 107.5 to 108 is our key band of support that we want to see hold for the Nasdaq 100. It's very good to see, obviously, that we did make it back above this prior level of support at 108. We rallied up to that level, consolidated, and then gained more ground on Friday. So obviously the market remains in an uptrend here. It's innocent until proven guilty. If we get a little bit of a pullback, though, down towards 107.5 to 108, it wouldn't be a horrible thing. It might actually be good for the market to pause a little bit. The Russell 2000, of course, continued its breakout here into new all-time high territory. So this market is once again leading us higher. It rallied up above that 5-day moving average, pulled back, tested it. That made the higher low here, and at this point where we had the higher high, that's where the buyers would regain control. So we have a pattern of higher highs and higher lows above a rising 5-day moving average on this 30-minute time frame, and that means we expect this market to continue to move higher. It will have pullbacks, of course, but our key level of support for early next week will be 124 to 124.25. For throughout next week, we'll want to see that level hold, especially since we have these prior highs over in this area as well. Semiconductors recovered much nicer than I thought they would have. I was thinking that some of these prior bands of support and resistance would continue to offer resistance, and you can see that they did. In fact, I mean, it got back above this level and held underneath that 57 level, but on Friday we added to it. So we have higher highs and higher lows above a rising 5-day moving average. The daily time frame is looking bullish again, and if we were to see a pullback down towards 57 57. That would be actually the preferable scenario here, is a pullback down towards 56 3/4 to 57. If that level continues to hold as support for the semiconductors, then we remain innocent until proven guilty and would expect to see continued higher prices. Financials continue to bang away at this level of resistance that's been plaguing it for most of the year. So it seems as though the buyers do in fact have control. We've got that 10-day moving average crossing back up through the 20-day moving average, and the 50-day moving average is beginning to rise once again. So it seems as though as long as we can hold above $24.30 to 35 cents, really $24.20 to $24.35, but ideally we can see $24.35 hold as support on a pullback. Then I think that the market ought to be making new highs for the year. Shares of Apple were down $1.60 on Friday. This continues to be the more important band of little resistance that we're going to want to see taken out before we can have confidence in the long side. So that is basically 129.25 up to about 129.75. If we can get back above and hold above that for, let's say, an hour or two, then Apple seems as though it should be able to make a run for new highs for the year. But it's having a little bit of difficulty, and that's not a bad thing. It has had a great run, and some pullback is certainly to be expected after a pullback like that. I had mentioned on Tuesday evening, shares of FireEye as a stock to keep an eye on. The action on Friday was a little bit disappointing here. What we were talking about, what I was mentioning, was the fact that it was looking like it was transitioning back to the buyers being in control. We had lower highs and lower lows below a declining 5-day moving average. We started to see that 5-day moving average turn sideways, and then we saw a higher high. And really, as I said, your worst case stop ought to be down below this level, so back below this pullback low over here near about $40.75. I'm not involved in it. I had been involved and set a stop just because I always keep tight stops. I do plan on getting back involved in this stock if it recovers back up towards this level, holds that 5-day moving average. I mean, it's got a big short position. It's got strong fundamentals, and right now it's having a little trouble with the 20-day moving average. So I think it just needs a little bit more time before we can consider it as the buyers have regained control, and that the short sellers hopefully will be able to feel some pressure and get squeezed in this one.